Hey, what's up? Today I wanted to share my altcoin yield farming strategy, and I wanted to go over a few things here in this video. The first one being is, are we in altcoin season right now? The second is my altcoin to ETH pair strategy that has been working well for me in the past. And lastly, a few tips and tricks and some things to keep in mind so that if you do decide to implement the strategy, you don't lose a lot of money in the process. If you're new here, my name is Richard. I'm a yield farmer and investor. If you want to take a deeper dive at my portfolio, you can look at this portfolio update playlist here. But I've been able to build my investment portfolio to multiple six figures thanks to crypto in under 4 years. And hopefully these lessons help you become a better yield farmer and make more money in the process. So before we dive into the specific strategy, I want to share a little bit of my thoughts on the market, where we are right now, and where we could potentially go. And again, this is not financial advice. I'm not your financial advisor. Please do your own research. And I can't really tell the future, right? This is my best guess of what the market is going to do. And I'm sharing with you how I'm positioned to capture that upside. So if you guys are an altcoin investor, you probably have seen this chart, and this is what we want to keep a close eye on. This is the Bitcoin dominance chart. It's now sitting at 58.26%. And in my opinion, if it's a sustained downward pressure below 60%, we will eventually break down below 50% as these altcoins outperform Bitcoin. And you can see we did have pretty big monthly closes above these two key exponential moving averages. This is the 10-month exponential moving average. Again, we're on the monthly chart. And what we see is also the MACD cross that is potentially signaling a strong move downwards. We did have a cross here last cycle, but the first one was the false signal, where the second one, we actually saw a huge crackdown. I did mark two vertical lines here. The first is a false breakdown, and the second is when Bitcoin dominance actually broke down really hard, right? What is the main difference between these two? It's Ethereum's price action. So if I overlay Ethereum's price over the Bitcoin dominance chart, what I want to share with you guys is that the first breakdown of Bitcoin dominance, Ethereum was outperforming, but it's not close to its all-time high, right? Eventually, Bitcoin did start to outperform once again, but eventually, as Ethereum breaks its previous all-time high, we saw a huge crackdown in Bitcoin dominance. So that's what I'm mainly watching out for. If this Bitcoin dominance is going to sustain below 60%, it seems like it would, in my opinion, and we're starting to see some sustained move as well if we're on the weekly chart. What I like to look for is this 20-period exponential moving average crossing over this 50-period simple moving average here. That is telling us that, okay, this move is sustained. Not like something back here, right? Where Bitcoin dominance went down and then came back up pretty aggressively, right? So that's the first thing to understand. And in my opinion, Ethereum's price action is also very important because keep in mind that Ethereum still makes up about like 13 to 14% of the crypto market, right? If Ethereum doubles in price from this current price point, it surely would put much more pressure on Bitcoin dominance, right? Just simply because Ethereum is much larger than these other altcoins. And what I'm looking out for is if Ethereum would stay above this $4,000 mark. If this area becomes an area of support, these key moving averages kind of catching up to it, right, provides an area of support. We could potentially see Ethereum breaking out higher and push towards $6,000 to $10,000 zone, right? So that's what I'm keeping an eye out for. And on the monthly chart, it still looks pretty bullish. The RSI is climbing back up a little bit. I use the 25-period RSI because I am a more longer-term investor. I'm not looking to take, every swing up. So I'm trying to filter out the noise, and I am watching this trend line here. So if this hits this trend line, then it could be argued that Ethereum's price is pretty overdrawn. Maybe a cycle top is near for Ethereum. And what I want to point out in terms of macro is that the DXY, the dollar index, is still dropping. I am looking at this 90 level where potentially the DXY might bottom out. And this could be a signal as well that maybe the dollar weakness is stopping and then the dollar might gain more strength, which could put pressure on risk on assets, right? But basically, if the dollar is really weak, then assets like stocks, crypto, gold, usually will do really well. And the reason why I believe the dollar will continue to be weak is because Trump really wants to pump the markets. He wants a weaker dollar. He wants the rates to come down. And if you guys look at the 10-year Treasury yield as well on the monthly chart, it's starting to kind of falter a little bit, maybe coming back down. The Fed is going to cut rate this month. The only uncertainty is how much they're going to cut and for how long, right? But to me, the risk and reward for altcoins are pretty good. And if we look at the others dominance chart as well, you can see I did mark out the zone where I probably want to be out of altcoins at this point. It's because if this others dominance chart is really high, it means that maybe the market is really euphoric. People are buying a ton of altcoins. It's outperforming Bitcoin, which is lower risk than a lot of these altcoins, right? And so if this chart is swinging back up in this zone, then I want to actually be taking profits much more aggressively. But I'm not going to wait until this zone to take my profits either, right? So I will share my exact strategy in this video, but everything to me is looking good. And another important chart that I want to share as well is this ETH to others chart. Basically, what I'm looking for is if this chart swings back down, it means that other altcoins are outperforming Ethereum, right? And most altcoins are riskier than Ethereum. So what I prefer to do is if these altcoins outperform Ethereum by a large margin, then I would be able to close my positions at a Ethereum profit, right? And you can see that this chart is mean reverting. It's not really like trending up or trending down, right? It's not like a long-term trend where Ethereum just keeps outperforming altcoins forever. It just swings back down, swings back up, go back down, go back up. But basically, if Ethereum is really overvalued compared to other altcoins, it becomes much more attractive for altcoin investors to buy altcoins instead of Ethereum, right? In fact, a lot of people do sell and rotate their Ethereum into altcoins when Ethereum is really overvalued. So that's something to consider. And I did mark this point where Ethereum is breaking its all-time high in the last cycle, where ETH basically outperformed altcoins by about almost 117%, where in this cycle, we saw a huge run up of 114%, right? Maybe this run already ended, and you could look at the RSI as well. When it's near 70, it always comes back down. So this is mean reverting here, where we see like, okay, near 70 here, the RSI, altcoins do outperform by quite a lot. And this basically also tells me like, okay, maybe this period of Ethereum outperformance is the short ETH season. And then when we see this big crack drawdown, we see a lot of larger caps and maybe like the mid and small caps start to outperform Ethereum. And to make this case even more compelling, we see Solana is basically starting to break out here. It's holding above this $200 level. It's forming more of an ascending triangle here, which is a breakout pattern. It's starting to break out, and I do have a client position that is yield farming Solana to USD with a pretty wide range here. This is the initial exit target, just a very non-greedy target, right? Because Solana hitting $250 is not a big deal at all, especially if the altcoin season swings around. And we see market leaders like Hype as well that is showing incredible strength. It's starting to break out here again. The pattern looks very similar, like an ascending triangle. It's kind of squeezing above the range here where the high is staying the same, but then it's setting a higher low, right? So like a ascending triangle pattern, which means that buyers are stepping in here, 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 squeezing the price up. And potentially if we do get a strong breakout, that's going to put even more pressure on Bitcoin dominance, right? And basically my altcoin to ETH pair strategy is I'm looking for a lot of good altcoins with strong fundamentals. And I want to be betting on these altcoins outperforming Ethereum. Because when that happens and we're yield farming, we're going to be able to close our positions at an Ethereum profit, right? A good example of this is Athena. I did get a pretty average entry here on this green horizontal line. I marked my rough exit here, and I might exit earlier as well if I don't want to be too greedy. But basically, I have this pretty wide range set. And what I want to do is I enter at a cheaper relative price. And again, I don't always get the perfect entry, right? It's a little bit hard to see like, okay, where the entry is going to be the best because we never know the future, right? When I entered back here, okay, we could argue that maybe it would drop down or maybe it could just continue upwards, right? If we see the strong price action last year, we saw that when Athena is grinding up against Ethereum, if you were waiting for a stronger pullback for an entry, you would have missed the entry, right? So I did enter a little bit higher than what I would like, but at the same time, it's a very comfortable entry. There's a lot of bullish fundamentals behind it. You guys could do your own research on Athena. And some of my positions are sitting in unrealized loss, for example, Pixel, but there are some bullish catalysts that is coming up, hopefully push the price upward. But what I'm trying to achieve here is this Ethereum profit, right? And throughout the whole time, I'm earning about 28 to 30% APR. If it's trading above my entry, what I will have is this positive Ethereum divergence loss. So this is really positive and it just adds to my profit margin, right? I'm up about 7 to 8% so far. And compared to holding, I'm also up as well. So if the altcoin season do swing back up, then we want to be able to try to close our position for an Ethereum profit, right? And the reason why I like to benchmark my performance against Ethereum is because if the altcoin doesn't outperform Ethereum in the first place, then you would do better to just hold Ethereum, right? Maybe stake some Ethereum, you'll farm some Ethereum to USDC. But if you want to yield farm altcoins, you want to try your best to find projects that are likely to outperform Ethereum. Of course, whatever you yield farm is not going to be 100%, right? But if we're basically swimming with the currents, going where the market is going, rather than like trying to go against the current, we try to get our best entry. And then when the risk on market comes back, we could capture all that upside, right? So for example, the reason why I like this is let's say we start with 10 Ethereum, we yield farm and then close in an Ethereum profit of let's say even 15 Ethereum, right? A 50% gain. It might not seem like a lot, but it's actually quite a lot, right? Because if you compound your gains over time, it's going to be worth a lot of money, especially if Ethereum just keeps going up in value. I don't really care that much about Ethereum's price movement because it's really hard to predict, right? It's going to like go up, go down over time. And these assets are actually denominated in Ethereum. When you guys pair Ethereum with these altcoins, you're not actually trading US dollar for altcoins. People that buy these on the on-chain exchanges, if the swaps go through these liquidity pools, they're actually exchanging that altcoin for some Ethereum or some Ethereum for that altcoin, right? So that's the first thing we want to be thinking in Ethereum terms. What we want to avoid is, let's say you start with 10 Ethereum, and then let's say you lose Ethereum in the process, right? For these altcoin to ETH pair, this is exactly what we want to avoid. And I see it all the time, people that think they're in profit because Ethereum is going up over time, but they're actually losing a bunch of Ethereum in the process, right? So the reason why I really like this is also once I have this 15 ETH of profit, I could also just use this 10 ETH to basically keep my longer term exposure. I could use that 5 ETH to pay for my expenses. I could swap it to some Bitcoin, or I could take the profits to stable coins as well, right? And the really nice thing about it is I still have this 10 ETH exposure that I could basically stay long in if I want to and hold my Ethereum for long term, right? Again, it's only favorable if you're gaining more ETH in the process. And same thing with like, let's say Hyperliquid to Ethereum. I actually marked this entry down here. I did not get into this pool because I'm already in a lot of other investments like Athena and Pendle. But if you actually enter down here and Hyperliquid starts outperforming Ethereum, you're actually going to be able to close for a profit, right? What I like to do is try to find like an area of support and then close near the area of resistance. If I'm trying to be less greedy to book in some profits, that's a great way to do it. And there's a few things to keep in mind if you guys are implementing this strategy. The first being that not every altcoin will outperform, right? For example, I'm sitting in this Pendle to ETH pool right now. The green line is my entry. The orange lines are actually not my range, but this is as tight I would go as far as the ranges if you guys are trying to prioritize APR. The reason being is that if you guys are squeezing the range, it's going to be very hard to stay in range. And when the prices are trading higher, you're basically earning no yield, right? And if you do chase the range upwards, then you could lose a ton of money in the process as well. I see a ton of people do this. For example, they yield farm with a tight range here. Okay, they're earning some really good fees for maybe a couple of months. And then if the prices move up, they start chasing the range upwards, right? And then what's going to happen is if the price draw down really sharp, you're going to lose a bunch of money in the process, right? And then if you chase back down, you're essentially selling your pendle for Ethereum at a cheap price. And then if pendle does swing back up against Ethereum, you basically locked in a ton of impermanent loss, and then you're going to lose money in the process, right? The only way to win with this strategy is that if the volatility is not that high and the APR is good enough. But in most cases, it's very hard to predict like the volume that's going to run through, the actual APR you're going to get. So that strategy is much, much higher risk. What I want to do again is try to find an area of support. Like for example, here is a great price to enter. It's even lower than my entry, right? And then when pendle is overvalued against Ethereum, we could consider exiting our positions for Ethereum profit. And again, we want to allocate a comfortable amount where we want to buy pendle anyway. So let's say you guys have like a 100K portfolio. You're fine with having a 5% or 10% allocation to pendle. Then you would only put a maximum of $5,000 to $10,000 into this pool, right? Because we want to think about the worst case scenario, what would happen. The worst case scenario is if pendle underperforms Ethereum by a large margin, right? If it exits the bottom of the range, what's going to happen is you're going to be stuck with a bunch of pendle. It's fine if the prices do recover, because then you could basically close your position and get your Ethereum back. But if it doesn't, then you have to realize some Ethereum loss, right? This is the risk with this strategy and yield farming any altcoin to ETH pair. If the altcoin does not outperform Ethereum, you will most likely lose Ethereum in the process. So that's something to keep in mind. And for example, even SUI here, you could be yield farming with a pretty tight range here. You would probably do pretty well. But again, if you rebalance up, and then SUI just underperforms Ethereum by a large amount, then you would lose a bunch of Ethereum in the process, right? If your goal is to actually accumulate more Ethereum. So that's why I like a wider range strategy. And again, no strategy is 100%. I don't know what the future is going to be. Maybe this would come down further, or it could just bounce here. And then SUI starts outperforming Ethereum when the altcoin season is in full swing and Ethereum is basically just moving sideways or not showing much strength, right? So that's something to keep in mind. No system is 100%. If you guys are running into people like promising like 100% profit, it just doesn't happen in altcoins, right? You need to be comfortable with taking risks, and we're taking pretty smart risks in this case, right? For example, even if I enter Athena to ETH at a worse entry than what I could have gotten, at the same time, you could argue that I didn't know the future, right? Maybe that would have been the best entry. And entering down here is definitely much better than entering up here, right? This is the mistake that a lot of people make all the time. They get into altcoin to Ethereum pair when the altcoin is very overvalued against Ethereum, especially if it's showing a really, really high APR because there's a lot of bullish news or whatever. Then only to find out that a lot of holders take profits either into Ethereum or stablecoins, then they lose a bunch of money in the process, right? So don't do that, guys. Try to get a good entry on assets that are very likely to outperform Ethereum, especially when the market condition is right. And I will share with you guys one position management secret here. Not a lot of people talk about this, but this is what I call smart compounding. Basically, what I want to do is if Athena is dropping below my entry, what I could do is actually compound down my fees from this pool and from other pools as well. And what's going to happen is it's going to drag down my entry. So let's say I enter back here in April of this year, right? If Athena drops hard below my entry, I add more capital to it with whatever capital I had through fees or from capital I had on the sidelines. It's going to drag down my entry. And if the prices do swing back up, then I'll be able to close my position for an Ethereum profit, right? This is what I call smart compounding. And if the prices do trade above my entry, what I want to do instead of compounding my gains, because that's going to like basically drag up my entry, I could be selling more of my fees into Ethereum to lock in those profits, right? So let's say Athena is having a huge run up against Ethereum for a couple months. We saw like November to December was really bullish, right? When I have that opportunity to earn those fees, I could be selling more of those fees into ETH. And then I could also potentially close out this whole position for an ETH profit and just de-risk my portfolio as well, right? So if you want to implement this strategy, keep in mind that not every altcoin is going to outperform. The fundamentals and your entry does matter. And if the market condition is right, then a lot of these alts will outperform, right? But not everyone will. That's why we don't go 100% into these altcoin position. And then no system is 100%, right? This system has yielded me pretty great result. But what I also like to do is diversify my positions a little bit, right? I do have an Ethereum to USDC pool right now, for example, that I'm trying to slowly sell my Ethereum on the way up in the next 6 to 12 months. It's going to earn me a steady yield. And in the worst case scenario, if Ethereum just goes back down, I would accumulate more Ethereum in the process, right? So this is what I like to have as well, is to have a blue chip allocation to my portfolio. So we definitely don't want to go like 100% into these smaller cap altcoins. It's going to be very tempting to chase the next play, to rotate your profits. We got to keep the greed in check, especially if the market seems a little bit overdrawn. I would rather miss out on like the next pump than to basically give back all of my gains, right? If you guys pay taxes on your earnings, that's something to keep in mind as well. We got to keep greed in check and always take profits. And what I've been doing as well is I sell my fees to de-risk. And that's either into Ethereum, Bitcoin, or stablecoins. Right now, I'm trying to up my stablecoin allocation. So one nice thing about yield farming is that you don't have to sell out of your positions. You could just sell your fees, harvest them, and turn them into stable coins to balance out your portfolio a little bit. If your portfolio is pretty altcoin heavy like mine is, then we could be doing this all the way on the way up, right? We could sell our fees to de-risk. And again, I'm looking at these chart really closely. If it seems overdrawn or if my profit levels are hit, I will be more aggressive when it comes to taking profits. So I hope that was helpful. That's how I was able to earn a ton of money yield farming altcoins to Ethereum. Hopefully it will help you do the same. If you want to check out more videos on yield farming, then be sure to go on my channel and check these videos out. I try to give you the best information so that you don't make the same mistakes that I did. Thank you once again for watching. I'll catch you next time.